Good afternoon, everybody. Very well shaved the head today, and beard, in fact. Almost bald, even though I am known as the bald CEO. I do have some hairs, it's just all gone at the front and a bit at the back. We have a very interesting protocol today. That is my catchphrase. We never have uninteresting protocols on. Isn't that crazy? We have Stablz, and Stablz is doing something which I always advocate for when I'm talking to my marketing team. I always say, make it as simple as possible, as easy as possible, and get rid of as many hurdles, because if there's anything we can rely on in crypto, it's laziness and a lack of understanding of how things work. So we have Ben from Stablz, which is going to be solving that problem. How are you, Ben?
Good.
Was that a decent summary of what the protocol was trying to do in terms of simplifying?
Yeah, pretty much. Very good summary.
Good stuff. Yeah, well, it'd be good to get it in your own words. I'm sure that I am not giving it enough justice. But yeah, it'd be great to introduce yourself, your background, and a bit about how Stablz was started.
Sure. So my background is mostly building in crypto, right? So I don't necessarily do the coding bits. That's what my lead dev does. But he and I sort of go back and forth of what to create and like for what reason, things like that. So Stablz actually started with us building something for Anchor Protocol. Well, we know how that turned out. So we sort of pivoted and took out what we learned from that whole experience of how to make something safer, but equally, simple to onboard new people, right? Because at the end of the day, crypto and decentralized finance pretty much gives us an alternative to traditional finance. We can make a lot more in terms of return. Sometimes it's safer, sometimes it's not, but definitely it's a lot more options than we have, in our own countries, right? Like every country also has completely different offerings, right? Like I'm from Asia. He was from the UK, right? So even between us, we have different things that we can do with our banks, pretty much.
Yeah.
So
I mean, one thing I was actually thinking, I constantly have Bloomberg on in the background. I don't know what it does for my stress levels, but I've constantly got Bloomberg on in the background. At least it's not the actual mainstream news. At least it's financial news, but still depressing. And I constantly hear, especially recently, them complaining about the fact that you can't actually see how much has been withdrawn from all these regional banks. All of it is just completely down to trusting them. And I think that Westpac, this Western Pacific Bank, I think is the full name of it, they came out today and they said that since the beginning of the year, they've had 20% of their deposits withdrawn. So that's a big old run on the bank. And the problem is, I bet you any money that those withdrawals will only quicken from them saying that. I don't know why they said it, but it's a common thing that transparency in traditional banking is punished. It's the same thing. Like if a financial, like a listed bank, asks for help, uses the Fed's discount facility or reverse repo, then they're punished for it by the market, because the market thinks you're in trouble, and it's a self-fulfilling prophecy. And this is the same sort of thing that you sometimes, when you get these runs on like Binance or runs on like crypto.com or Gate or FTX, obviously all of them survived it except FTX. So you can argue that these runs on the bank are actually overall good because it proves that who is financially stable, financially stable, there we go. But you bet you get a lot of puns.
Yeah. No, but I do agree, right? But the thing is, it sort of creates this feedback loop of if you keep everybody in the dark, you do better. You're able to make riskier bets because nobody is withdrawing their money, and if people are seeing that, they feel safer or they're making more money with your financial institution, then they don't withdraw, right? So it sort of rewards people who, even some banks even have been caught outright just lying on their balance sheets, similar to FTX, which is why they got so big in such a short time. But obviously, it was built on shambles, which is why it fell apart. But it's a system that rewards that behavior.
Yeah, to be fair, I sometimes wonder if crypto is pretty much the exact same thing, where transparency is again punished and sort of hiding it is rewarded. One thing I've noticed about, and if you look on Etherscan, in fact, anyone who's watching, if you look on like the top 200 tokens, search their token contract address into DEX tools, and you'll see that almost all of them have like completely rubbed their liquidity. If you look at Mana, it's got a smaller liquidity pool than VEMP does, and it's $1 billion token. And it's the same with all of them because that's how they are keeping themselves higher up in the rankings, is by, again, the opposite of what Stablz is doing. They increase the difficulties to exit, I should say. As in, obviously, Stablz is all about simplifying it. And they make and put as many hurdles as possible so that users can't just go onto a DEX and dump. They have to go onto like an exchange. They have to have an account. Once they have an account, can they sell it there? And then do they have to like fill out a whole new,
KYC and everything? Yeah.
Yeah, exactly. So if you look at how all of these like, top 500 protocols, like even like there's swaps, like actual DEXs, which have like terrible liquidity. And you think like, honestly, like, and this is where I say that you get an advantage because obviously the reason they're putting it onto an exchange is because they have market makers there. They can control the markets a lot easier. And, I have market makers on exchanges, but I still keep more than adequate DEX liquidity because if you are supposed to be a decentralized protocol or respecting decentralization anyway, you want people to be able to come and go as they please. But yeah, this is where with crypto, you are sometimes rewarded for making it, difficult for everybody. So yeah, just the perks of our industry, I guess, having to fight it out with all of these people who are definitely trying to get one up. But in regards to the actual functionality of Stablz, do you want to chat a bit more about how the yield is generated? Because I know that that's a hot topic. Everybody always likes to double check that it's not.
Yeah. No, I mean, so we started off with Curve pools because pretty much Curve is the home of stablecoins, right? It's got the largest amount of liquidity for stablecoins. So we decided to build on those farms first. So the yield that you get from Curve Finance is denominated in Curve CRV tokens, right? So let's say you put in $1,000, the yield you get fluctuates. You get, depending on what pool it is, you can get 3%, 4%. But as you get those Curve tokens and their price fluctuates, your yield also fluctuates because you don't know how much you're actually getting anymore, because you're getting it 3% over the year for this block, but by tomorrow the price has changed. So what you got yesterday is not necessarily worth what it was supposed to be when they gave it to you, right? So for us, we just take those emissions, we automatically claim your yield for you We call that a harvest, and then we swap it over to stablecoins. So what you do get from before, it stays the same. It's already in stablecoins. So your principal's in stablecoins, your yield should be in stablecoins, because that's how traditional finance works. If I'm asking you to deposit into your bank account US dollars, I shouldn't be paying you in Turkish lira. Like, it's weird. That's one problem we solve in terms of simplicity. DeFi is still in its early stages, so sometimes it gets a little complicated for new entrants, which is what we all want in our industry. We want more people to come in and join us.
Absolutely. And have you? Well, actually, I can tell that you have given any thought to like regulation and how that will impact, because every time that I go onto the site, I have to tick an extremely long form. But is that sort of the plan when you were building this? You knew that with these things you do inevitably have, and with any protocol or any sort of staking or DeFi, you do have the scrutiny that can come with it. Usually when you get big enough that you have to worry about that scrutiny, it means you've done well. But what did you think about that? And I know that you implemented like that long form, so it'd be good to know the processes that you went through and everything like that.
Yeah, I mean, so one of the three Curve tokens is USDC, and they're regulated and based in the US. So we figured one day the regulators are going to come for these stable coins, right? So even if we're just building on top of another protocol, we may as well set up some defenses on that front, right? So we're based in Dubai. The company is based in Dubai. We just build on top of other farms. We don't really put out our own farms. Like we don't generate the yield for people. We just convert the yield from somewhere else, right? So even if we're putting up other pools outside of Curve, it's always a pool that generates yield from something else, right? So one of the things we've done is we put up Arcadium pool. It's like it's an on-chain casino on Arbitrum. We've allowed deposits into the casino bankroll system that they have. So in a similar fashion, it's always, here's something that generates yield. You can use our platform to chuck into that and make your money. So we're sort of like we don't produce the goods. We're the marketplace for the goods. We're just
you plead the fifth.
Yeah, pretty much. We don't involve ourselves in the parts that are to get regulated, because I think that's coming. Maybe this run, that's when they'll start to do it, when things heat up again. But yeah, we're keeping out of that.
Yeah, I know. I mean, this run is mad, to be honest. I mean, it seems just a little bit too good to be true. But hey, I've been saying that since about like 25K, and it keeps going. But yeah, they're certainly bringing the hammer. But yeah, we'll see how that goes. And how have you found? Because you launched 4 or 5 weeks ago, was it? What sort of challenges have you found, and what's the journey been like so far?
Well, right now the market is doing really good, but Bitcoin is sucking the liquidity out of the smaller caps. Bitcoin dominance has just climbed up recently. It's made it for the token side. It's made it a bit hard for us, but in terms of the market's healthy, so they're happy in general. So it's easy to talk to people lately, as opposed to if we launched maybe 6 months ago and then the whole FTX thing happened, everyone was just sour. Any chat you went to was just full of upset people. So at least now, they're just excited for everything else to happen.
Sounds like we're at the top then.
Okay, no,
Everyone's happy.
I would have. I don't want to jinx it, right? But
well, at least
I don't know. I don't know.
You got your stablecoin pairing on Dex, so that helps. I always see that. Well, it can be a blessing and a curse, because you you don't necessarily benefit from when if you're paired with ETH and ETH pumps, then it automatically rebalances and it sort of pushes your price higher. But obviously with a stable coin, it doesn't do that on pumps, but it
On dumps, we're protected at least, yeah.
But yeah,
well, I've seen projects too who get paired with ETH, and then ETH is pumping. Let's say small buy pumps the price, but then because ETH is pumping so much, some of those holders of that project anyway dump their token in favor of ETH. So it's like you benefit and then you get dumped on. So
it's always a route though, isn't it? But yeah, I mean, I've a lot of it's hard to explain, but yeah, in terms of Bitcoin dominance, it is such a Bitcoin pump, to be honest. I mean, even like when I'm trading, I trade Bitcoin predominantly, and I will buy ETH as a hedge because I'm overall bearish, but you know, I still don't just trade one direction because that is how you get wrecked. So I buy ETH on dumps, or when I'm feeling scared or good about how my Bitcoin position is looking, I buy ETH because I know that if I'm feeling good, it means that it's probably getting close to a time where I need to buy rather than sell. But I've even noticed, like, when Bitcoin pumps a lot, ETH is lagging like tons. If you look at Bitcoin against ETH, like, honestly, Bitcoin is just doing so well. But then, in fact, I don't know if I won't be able to find it without clicking too much, but I shared a graph into a group that I'm in, and Bitcoin whales have been decreasing their bags since October, and retail have been increasing. Like wallets holding like over 10 Bitcoin have been decreasing, whilst wallets holding between 0.1 to 1 have been increasing. So whales have
there's a retail pump
throughout this pump. So this pump is driven by, almost certainly, I'm certain it's literally just CZ pumping it with USD.
I think so.
Yeah, because it's like everything originates from like BUSD and from like Binance. It's mad.
But to be fair, we got a giant pump when CZ said he was going to use what is it, 1 billion BUSD to buy up BTC and ETH and BNB, I think, or I think it was just the two.
I don't know.
And so people went on to front run him.
But like he must have known that. The thing is, he is almost certainly just used them for exit liquidity. Like, you know, he knew what he was doing when he said that. He knew it would impact.
Yeah, he's a smart guy.
So yeah, I just I don't know how other people don't see it, but yeah, I mean, everything now is just down to FOMC later. I'm just conscious to make sure that I've got wide enough margins because it's always
it's going to wick both directions, 100%.
Yeah, absolute. Actually, I don't know if I'm past watershed or if we'll get shadow banned from YouTube, but yeah, they love to screw everybody. Just max pain, literally stop out bears, stop out bulls,
stop out
slide on direction.
Yeah. I mean, it happens every time there's a big meeting, right? There's a big meeting, or if there's emergency hike, those just come out of nowhere, but same story every time. Max pain.
I think I see if this one I actually can find without clicking too much because I shared it earlier. Yeah, here we are. See if I can share this. Not sure if that's, yeah, that is showing. There we go. So that's the charts of every FOMC meeting. Literally every single one, pump and dump. Like every one. Like it's different stages and different amounts of pump and dump, but you can see top one, big old pump and then fade. Big old pump, strong fade. Big old pump, strong fade. Big old pump, strong fade. Pump, small fade, pump, small fade, pump, small fade, pump, small fade. Every single one, it's the same though. Run it up. actually, it's Jerome Powell every single time the interest rate announcement comes out, and it comes in at expectation. And because there's no bad news, no news is good news. So then it pumps up in the half an hour before he starts speaking. Then Jerome Powell opens his mouth and it fucking dumps like every time. This is the thing sometimes, and the theory I have is that when it becomes too obvious, when everybody has it figured out, which is what you have right now, what you had in 1929 before the Great Depression, when everybody decides that stocks only go up, literally, it's the saying now, stocks only go up, print to go boo. Like when that stuff becomes such commonplace language, it's a big old warning sign, because people don't remember that it took a decade for the NASDAQ. In fact, I think it took 12 years for the NASDAQ to come back from its .com bubble highs. It took from 2001 to 2012 for the NASDAQ to make back everything from the .com bubble. And it took 5 years for the S&P to make back .com to 2007. Then it took another 5 years. People have forgotten what bear markets are like, because everybody thinks they've experienced one with COVID, but COVID was not normal. It was just
I mean, COVID was like a once in 100-year black swan event. Nobody saw that coming.
It was complete.
I mean, the last real one. Yeah, go ahead.
It was complete, like V, as in like they had to go full throttle because they didn't know what they were dealing with. It was like, it wasn't a financial crisis in the fact that it was a banking crisis, or like a crisis of like confidence where people run on the banks, like you can get and you're seeing in some form now. It was, look, we don't know what's happening. We know that we're locking down the economy. That's going to be bad for the economy. We don't know how long it will be. We don't know when. So let's just stimulate it as much as possible. And obviously, it's completely overdone it. And now everybody is thinking, and we've had a decade of QE since 2013. European debt crisis. It's been up only, and people have forgotten. Well, no, people have forgotten that stocks can go down, and the Fed isn't helping because the Fed is the inability of the central bank to remain independent. And the fact that any slight bit of pain whatsoever is met now with printing of money. Like we had, the 16th largest bank fail, and they immediately jumped in and undid half of the quantitative tightening they had done. That just, when I saw that, I thought it's over within a decade. The end of the monetary system is coming, because if you have a federal exchange that is no longer independent, and that they cannot stomach even like, what was it, 100 or 200 point drop on the stock market, and then they get the printer back out, honestly, like central bank credibility is dead. Literally give it like 5 years. In fact, if they react badly again, and I tell you what, if they pause at this meeting, like must be Jerome Powell is literally the worst. He'll go down in history as the worst federal exchange and the absolute dumbest that there's ever been. Like every decision he makes is counterproductive. The whole reason we've got inflation coming back like it has now is because he's celebrating, was doing victory laps and saying disinflation, disinflation. And the market absolutely rallied, which meant the dollar dropped, commodities went up. Inflation is back. We were talking about 50 basis points 2 weeks ago because it had come back. The jobs data is still extremely good. Even last week's jobs data beat. Everyone has forgotten it because of the banking crisis and thinks they're going to pivot. I can't stress like the speed that inflation will come back if they pause or cut rates. Honestly, people think they want it because it means that, like, Bitcoin will rally, but I don't think people really understand what it will do for the rest of their lives, in fact, because it will just start it will be the collapse of arguably the American empire is collapsing anyway, but it will fast forward the collapse of America like so quick. And whenever a global superpower dies, it's not. That's why you had the Dark Ages after the Roman Empire fell, because everyone forgot even how to write, because it was like the collapse of society is so profound. But now we're getting really distracted.
Stablz. I was about to contribute to that, but then I realized this has nothing to do. What I was about to say had nothing to do with stable coins, financial markets.
I'm interested to hear now, so go on.
No, I was saying I read something about that before, of how, why is it easier for us to imagine this was at the time that zombie movies and series were kind of everywhere, and there was an article from a sort of philosophical standpoint where why is it easier for us to imagine a complete breakdown of society versus just a simple switch from let's say right now capitalism or the American hegemony to just another one? Why is it easier for us to go straight to breakdown of society?
I think it's a normalcy bias.
Right. Yeah.
Normalcy bias is actually it's not a it's exhibited by around 80% of the human population in when they are experiencing some sort of crisis or natural disaster, and it is the underreaction to what is obviously going on around them. And that could be like a tsunami, an earthquake, and humans just cannot comprehend psychologically how devastating their current position is, which is why people never react, and why people would think about a Fed pivot, even though half of the people who know, well, you think about the Fed, right, and all of the terrible decisions that they've made, they are supposed to be the most educated economists in the world.
They're the top of the food chain right now,
and they get it so wrong all the time, and that is because they can't comprehend further than what is straight in front of them. And that's why they keep making these errors, because they are not thinking about the fact that if they pivot now, it will weaken the dollar. When the dollar weakens, commodities go up. They are just thinking, we need to fix this problem in front of us. And this is a problem with current politics and 2-year terms, 4-year terms, 8-year terms. Nobody cares after their term ends. And that means that every decision is short-sighted, and every decision is only done just to appease their current position, so that in the next round of voting, they can say, well, it's not my fault, it's their fault. And this is why society is, I think the turning point was, and a lot of people also agree with this, in terms of philosophers and sociologists, the turning point was 9/11, because you just got to 2001, you had the technical age had just begun, the internet and email started coming into every single office, and then you had the Patriot Act, and you had the seizing of civil liberties back from the people and into the hands of the state again. Then slowly you had the Iraq War, which was predicated on lies, on deceit, on weapons of mass destruction that were never found. You then had the banking crisis, which led to a complete loss of confidence in the financial system, the bailouts. From that moment forward, we were desperate to never let any bank ever fail. And since that point, it's just been a perpetuating cycle of short-term thinking, destruction of human rights, property rights, financial rights, and just
the long-term devaluation of the global currency because of the money printing to try to not let any more banks fail, right?
Mm.
And now, because the banks themselves know this, now they know that we're going to get bailed out if we go under, right? So let's take the riskiest bets possible, make as much money as possible, and when the bubble pops, we'll ask for help from the government.
Well, this is the idea of moral hazard. And it's true. I mean, you got to think about the fact that why did Silicon Valley Bank not hedge any of its interest rate, not hedge against interest rate rises? And the reason why is because of this decade of money printing and low interest rates. They couldn't comprehend in their tiny little minds that things could change. Normalcy bias. They thought there is no way that we will ever get to a world where higher interest rates are a thing. They thought, like all of these people do, that the Fed is going to pivot. It's what we're talking about now. Every single rally that we've had in stocks and Bitcoin is based on this. Every time it's bollocks that we are going to pivot. Every rally is based on that, because people don't realize that there has been underlying structural changes in society and energy and global politics and macro, which means that disinflation is a thing of the past. And people do not realize, and these banks are all absolute idiots. And they did not hedge because they thought if interest rates get high enough, they will break something and they will pivot. And they're going to be wrong unless Jerome Powell decides to collapse like the whole monetary system by cutting rates at this meeting or holding them at this meeting, unless this is all by design, which it could well be, because I sometimes think, how could they possibly be so dumb? I think that it's got to be, surely, like there's no excuse for it. They can't be that stupid, so it must be by design. But again, we'll find out soon. But if you are, a bank and that, and if you're listening to Jerome Powell's words, he said whatever it takes to get inflation down. So we're going to find out if that's a lie later on today, and people better hope it's not, to be honest. Better hope he's telling the truth, because if he does start cutting rates, like, enjoy the short-term pump, but it's going to be chaos within 2 years, probably, maybe even less. This one of the comments, this stablecoin conversation took a turn.
Yeah, that is
It
true.
did.
We've gone way macro.
I love macro. Macro is my thing.
Yeah, but the thing is,
going back to Stablz and talking about, maybe this is relevant actually, because it's about keeping the community engaged and not having them, run off and start talking about corruption and conspiracies about the Federal Reserve. How do you keep that level of activity high in the Telegram, in Discord, on Twitter? Have you found any tricks, or have you found any complaints?
So mostly right now we talk to them, the mods and us. We have a few people who are like always around. So we talk to them. We just talk to them about what's happening, because that's what there is to talk about. Other than, when there is project news, right? Like we won't be able to put something like new pull out every day. That's a little bit insane. But most of the time there is something to talk about, because it's the second largest bank failure in US history. It's going to affect crypto one way or another. They've turned on the printers again. Bitcoin is pumping. There's always something, right? So we pretty much just engage with everybody based on current events. It's what there is that's happening. When people go into speculation of what we're doing next, obviously we go silent. We can't leak anything that's not yet confirmed. We can't, we just wait for the announcements to go, or we go back to talking about whatever it was we were talking before that, right? But we just keep the community engaged. We talk about other things. We don't limit it to, look, this is the Telegram for Stablz. Don't talk about anything else other than this. Like, sometimes that's hard to do. We keep it kind of open, right? And that helps us. That's helped us with engagement.
Yeah, absolutely. I mean, what a lot of people don't realize, and I find it frustrating, and we have like a separate price chat, and a lot of people do, like when
Oh
you
yeah, we do have that too.
exchanges, like we I'm not sure if you've applied or heard back, but when you apply to Coinbase, they assess you and they come back with a list of changes, basically, or things that you need to improve on. And two of the things are to do with the founding team. One is that the protocol and some feedback we got, this was like at the very beginning, was that the founders are too involved in the community. And what they want to make sure is that the founders are not integral to the community and to the protocol. So if you are active in your chats too much, literally Coinbase will score you down for that. Another thing is team talking about the token,
Price,
talking about it, speculating on it. And again, you get marked down for that. So that's like two of the things they came back from was what people complain about. Like when I'm talking to other tokens, like you guys, like or if I tweet and I use a ticker that's not VEMP, every time it's like, why are you not talking about VEMP, and why are you talking about this other like token? But people don't realize that I literally, if they want to be on top exchanges, there are hoops that need to be going through. I can talk about other tokens all day long, and I can do TA on them. I can speculate on which way I think they're going, because it's not mine. But as soon as
it's not yours, it's
then it's it's looked down on, and it's only like slowing sort of progress down if we're talking about like our own token, because but a lot of people don't realize they just mean when Moon, when exchange, when Binance. Funnily enough, I think we had a comment here, a question for you: when top 5 exchange listing announcement?
So but even especially with the top ones, right? I can't talk about it up until they announce it. I gotta wait for them. I can't name drop or anything. We have to play it by the book, because I've spoken to other projects before, and I think one or two of them, they mentioned, I'm not even going to say the exchange, just because I don't want any speculation and flaming in the chat. But they mentioned they were going on this exchange, and this was already signed and everything, right? It was confirmed. And then the exchange was like, well, we hadn't announced yet, so I don't know why you told your community that. So they cut the exchange listing.
Yeah, it happens. It's agreed in
all
terms. Funnily enough, actually, and it's happened twice now. You know what people are like on Etherscan. Like, some people are just way too involved. And ahead of VEMP's KuCoin listing, somebody evidently found out like KuCoin's address that already leaked, like KuCoin's address that they accept tokens to. So when we sent the payment for KuCoin, within like 2 minutes, we had somebody come into our chat and say, is VEMP listing on KuCoin? And we had to ban them, even though they didn't actually do anything wrong. But, and then we had like tons of massive buys come in, and it was evidently because somebody was watching.
That one guy saw it.
And we had to just pretend we had no idea what was going on, because obviously we can't talk about it. And then we had to also, I took screenshots because I was really worried about the fact that, well, obviously we got.
They would blame you. So
I had to take screenshots of like, by the way, somebody is watching your address because I just sent it and this person said this, like, because I was panicking, thinking, well, they're going to think that I've like spilled it or I'm front running it, because obviously, they don't want that either, because if everybody buys like the day before the announcement, it's buy the rumor, sell the news, isn't it? And it will dump on listing. And then we'd suffer. So the same thing happened when back in September, when I was listing VEMP on Gate.io, I sent the tokens, and I went into our Chinese community and I saw them talking about.
And someone saw it already.
Someone
had,
That's insane. Seen the thing. Like honestly, you got to be so careful, and people will track this sort of thing down by going to like these exchanges. They will see what address like a recent listing has had a big transaction to, and they'll filter it down by that and they'll use it to their advantage. And good on them, but I don't think people really might not realize the fact that, like, yeah, if you want to do that sort of thing, that's fine, but don't go into the community and start telling them, because
Yeah. Well, I mean, the reason they do that, right, is they buy a giant amount and then they start pumping their bags.
they want to FOMO
But
everybody.
for the project side, it just gets us into so much trouble because we get blamed for everything. That's pretty much our job.
Yeah, trust me. Unfortunately, you're right. Can't do if you do anything right, it's not you, and if you do anything wrong, then it is 100% you, whether you did it or not. Unfortunately, that is the world we live in. One day it will change. Who knows? Transparency might be rewarded. Just a reminder to everyone in the chat, any questions you have, make sure that you ask them. We've got a couple more things to run through before we move on to the comments. But when roadmap, or what's the short and long term that you can talk about? Any upcoming features being added?
Well, this is one I mentioned on an AMA recently. We're looking at real world asset pool relating to real estate, like sort of fractionalized real estate. I'm speaking to a company in the US. They sort of they buy depressed homes and then they fix it up and then they go rent it out or they sell it outright. And that's where the yield of that would come from. It's a VAPY with a floor. It's a bit weird, but yeah, that seems like that's the direction we're going. We're going to maintain going after real world assets because it generates a lot of yield. And I think part of the problem with stablecoin liquidity in crypto right now is that it's a bit oversupplied. Everyone's looking for a place to put their stablecoins because now there's institutional money, and obviously they keep their money in stablecoins. So all of these like Curve, Convex, and everything, the non-shitcoin ones, the blue chip stablecoins, the yield is so dry that one way to actually tackle it is to have people convert their money into crypto, and then they're in stablecoins. And then the stablecoins go back into the real world, fund business activities. But the thing is, you're on a global playing field, right? So you're able to get funding from a much wider audience. Do the thing that you do best, give it back to your audience, and then people make money without the barriers to entry of the accredited institutions, accredited investors, and everything. I think I like where we're going with that. Sorry, go ahead.
I was going to say I saw, and I'm speaking with a token at the moment that's launching on Arbitrum, and I think you guys have partnered with them. Zertum, Matrix backwards.
Yeah.
What do you guys do with them?
So they're on the front of like the education part, right? So they're going to be doing like trivia nights. They're rewarding people in their tokens. But our product has a lot of features, but the features themselves are quite simple. So we're just going to be working with them to help educate, newcomers. It's like an onboarding process, right? And they're on Arbitrum chain, which is great because there's a lot of hype on there. There's a lot of newcomers coming to that chain. So that's one way for us to reach a new audience. That's mostly what we're doing, the educational front.
Yeah, I mean, it's definitely reason I'm speaking to the protocol. I think I was introduced to them by a friend, but yeah, I mean, the problem, especially with DeFi and with staking, like I remember the first time I went onto like Curve Finance, I thought like I will never understand this. Like it was. I mean, I know they changed their UI recently. Funnily enough, and I hate the new UI. It's probably a lot easier and more simple, but I'm like, I just have to go back to the old UI because I'm used to it. But originally, I had to have such hand holding, And the problem with hand-holding in crypto is that whenever you need to ask for help, you inevitably get 9 scammers and 1 helpful person.
Yeah, that is true.
So it's good to have a protocol that actually can provide that, or like an educational link anyway, so that you can go to a source where you can actually learn, they are just a education protocol. They're not trying to necessarily sell you something, the benefit of working with
and
them.
it's nice too, because I've seen crypto projects say, like, we're building a DEX and then we have an educational portal. Like, you need to stop confusing your audience, decide what you're doing for them, and stick to that, because that clears up your branding. It confuses people less. So it's nice to see that there's one that's just like, we're education. That's it. This is our main focus. They have some like minor other features, right? But they're gonna stick to the one thing.
Yeah. In regards to speaking about like going back to, but not too far back to macro, don't want to get carried away.
We'll be here for another hour.
Yeah. In terms of like, I know that whatever his name is, like Balaji, he's been talking about making these absurd like bets. I mean, I don't think they're absurd.
Balaji or something.
Yeah, he's talking about hyperinflation and talking about how Bitcoin will be worth $1 million within 3 months. And that's due to, well, he believes that is due to the fact that
the dollar is going to collapse, according to him, right?
Yeah, exactly. I mean, I think that if Jerome Powell, for example, pivots today or cuts rates, it certainly makes it much more likely. But 3 months is too, like, these things take a while to hit. And
it's wildly, what is the word for it? It's a show, right? It's over exaggerated, of course. I don't think even he believes 3 months is all the shit's gonna happen. There's no way.
I just don't get why he'd make, like, as in, like, to me, the impact of making the bet, like, even if he said $1 million Bitcoin within 6 months, I would still be thinking, are you insane? Like, why 3 months? Like, surely that, I mean, it can happen quicker.
He very much reminds me of those, the Federal Reserve is going to collapse on YouTube, and you get these conspiracy theories for like 40 minutes, right? You see those sometimes. Like, this is exactly what it reads out to me, but it just so happens to be on Twitter and in text form and about Bitcoin.
Yeah,
but I don't know. It's hard to take it seriously.
Yeah, I mean, I certainly understand the sentiment, and I think people mistake the fact that he isn't talking about tons of new liquidity flowing into Bitcoin. He's talking about a collapse of the dollar against Bitcoin. Bitcoin doesn't have to remain, it doesn't have to pump if the dollar massively is dumping. Like, it can, just remain stable and still get to $1 million because the dollar depreciates so much. And there is an argument. I mean, if you look back at the case study of hyperinflation of the Reichsmark in Germany,
or even not too far, right? Like, you could look at Venezuela recently, Turkey recently. There's been a few.
Well, the definition, as in the textbook definition of hyperinflation, is over 50% inflation per month.
Yeah.
Which you've had in Venezuela and Zimbabwe. Turkey is obviously like, like, calling it hyperinflation is still accurate, but if in terms of like I don't want to say scientific because that's not true, but like
the textbook definition, right?
Yeah, exactly. But it's once the people and anyone loses confidence in the money that they have, then it can get out of control very, very quickly. It took 2 years for like the Reichsmark to buy the price it cost in like the German currency at the time to buy like 6 eggs for the same price of that in 2 years later would have got you 1 billion eggs. That's how quickly like it got out of control. So if you had like, let's say one Reichsmark bought 6 eggs, the next 2 years later, the amount of like Reichsmark it would cost to buy the same amount of eggs would have bought 1 billion eggs 2 years ago. Like that's how quick it can get out of control when people lose complete faith in what that, and that's why the bull case for like gold. I'm very much gold bull, and I would love Bitcoin to become like digital gold. People are saying, "Oh, it's happening now because of the banking and it's pumping." I think it's a coincidence. Like if you look at the Nasdaq has also been outperforming small caps, outperforming the Dow Jones and the S&P 500. It's up 6% when in the same time period the Russell 2000 was down 10%. 16% outperformance in the stock market. That is absolutely huge, especially when it's the same nationality and index. And people don't realize that the reason why Bitcoin is performing is because the Nasdaq is performing. They're the most correlated assets out of all of the indexes and all of like the securities and ETFs that you can track. And the reason why the Nasdaq is pumping is because the market has changed from an inflationary bear market where rates go down. Well, no, bonds go down, yields go up, and therefore tech dumps because bond yields reflect interest rates. And so everybody still had their bots and algorithms, which are 99% of trading these days on the stock market. Everybody still had their bots and algorithms placed on yields up, stocks down, yields down, stocks up. So because we had a massive drop in yields due to everyone thinking pivot again, that is why NASDAQ got so heavily bid, because everyone thinks that the Fed is going to pivot and they think this is going to be good for tech. So let's buy tech now. And the bots obviously don't see, oh, there's regional banks collapsing. This looks a bit hairy. They just are programmed when yields drop by tech. And so you've had tech bid, and that's moved over into Bitcoin because Bitcoin tracks the NASDAQ. So I think it's it's not as simple as it looks on the thing. Again, even
nothing ever is really.
Got as distracted. The thing I wanted to actually ask was, what is the plan with Stablz if the dollar, because you guys convert to the dollar at present, what is the plan if it becomes unsustainable for the dollar to be the stablecoin? Have you thought that far ahead, or
there is a project who's been don't quote me on this, right? It's Alpha, and I don't remember the name of the project, so that'll keep me safe based on the conversations we've had today. There's a project that's been commissioned to do the AED stablecoin. So that's something, especially on here, right? I actually use the Arabic dirham. I think that's something I would definitely look into to add to the protocol. Farming in that and other stable coins. I think other stable coins are starting to get more traction.
Dirham is pegged to the dollar.
Well, it's pegged to the dollar floating, sort of. It's a soft peg, right? If the dollar goes insane, I'm pretty sure that the government, or rather the Royal Ministry of Finance, is going to make a change to that soft peg, because they're the ones who maintain that peg. If they see a rather fast loss of value, then they're going to get out of that. Yeah, because we have the gold. As if I was part of the government, but we have the gold to back whatever real value it should be at, right? Whether it's pegged to the dollar or not.
You always use and convert to Pax Gold.
There's that too, right? There's several options for it. I think it's just that we're a bit early in the project development, and lifespan, where we're still delivering on the main focus of what it is. But with a name like Stablz, we're not necessarily stuck to the US dollar. Right now we are, but the future gives us some flexibility on that front.
Fair
But
enough, I
yeah,
guess, yeah.
Paxos Gold, that's an option too.
First 6 weeks, I guess you can you got more important things to worry about than future.
Yeah, then the dollar collapsing.
Going into the comments now, just for a few final questions. Most of these we've covered, to be honest, in terms of like the when top 5 exchange listing announcement, right. Someone saying, "Oh yeah, what chains are Stablz on? Is it just ETH at the moment, or are you on others?"
So the coin, the token Stablz will remain on ETH for the foreseeable future, is what I can say. But the pools the pools are not directly linked to the token, right? So we're able to open pools on Arbitrum. The platform fees on that get bridged to Ethereum still, because that's where the token is and that's where the value accrual for that is. But yeah, we're very much open to opening pools for farming on any other chain.
True. Actually, I didn't take into the fact that since you aren't, acting like Yearn or Convex in terms of like adding yield to yield like an aggregator. I mean, that's another one of the questions is like a yield aggregator question mark, but it's different in the fact that you are not trying to, incentivize people to stake, like the curve with you guys. You still might, do that, but your protocol is about simplifying the options and allowing, for the users to actually not have to sort of do all of this and run all these farms and understand curve, etc.
Yeah.
So, how would you describe it if you had to give a name? Because obviously yield aggregator is quite common. Do you have like a term that you've decided on yet?
Not yet. Right now, I've been saying a commodified yield aggregator.
Commodified, did you say?
Well, modified is it's.
Oh, sorry.
It just opens up the conversation. Right?
Yeah, I thought you said commodified, like commodities.
Oh no, modified.
Fair enough. Yeah. No, that's
right.
Could there be a DAO which decides which real estate opportunities Stablz takes for the pools?
Oh, that's the thing I mentioned a while ago. Right now, we're partnered with. We're going to be partnered with just that one, and that's sort of that company's bread and butter. So for the first pool, I would say they're in charge of it all, and then they just pass on the profits to you, the depositors. Long term, if we get into like really big in size, and we'd have to get on with other companies that do the similar thing that they're doing. There could be a DAO to approve or deny a company that would work with the deposits. That's something that's very open to, right? Like the Stablz coin itself, the token is meant to be a governance token anyway when it's staked. So yeah, we have the infrastructure for that if we get to that point.
Good stuff. Obviously, it always comes with the additional questions on like regulations and everything. And also it's about whether there's people in-house, and also if you trust a DAO, at the end of the day, property investing isn't just I'll pick this one here. Like
it's not a majority vote. There's got to be some expertise to it.
Yeah, and you need experts. I mean, they can certainly give it a try, but full well that if they make bad decisions, they won't blame the DAO. They'll blame you for allowing the DAO.
Yep.
Yeah. There's all the fun, but definitely interesting conversation, both on Stablz and the half of it was spent on other topics as well. Shane, so the time we get the news from FOMC is in half an hour, but that's the interest rate announcement, and I think only once since year 2000 has it not come in at expectation. So inevitably, what you always get is that people will buy or sell based on the initial interest rate. Then they will get stopped out because it always does the opposite. And then when Jerome Powell opens his mouth, he'll dump the shit out of it. So don't trade the interest rate announcement, trade the press conference. It's all going to come down to Jerome Powell's language. If he, the market is currently pricing that the dot plot, the terminal rate of the Fed, is going to be lower, even though they've said all along that, like, the last time they were speaking, they were talking about hiking 50 basis points and like it was going to be a higher thing. Suddenly this bank collapse happened and then everyone thought they're going to cut. But now this is like, they're in such a difficult position, which they've done to themselves. Like, you know, the guy's a twat, don't get me wrong. Like, he's an idiot. But like now,
it's also not the first time they've been in this position.
I know. Trust me, I was telling them to, like, the whole problem is they haven't crushed the market early, and now you have a situation where they celebrated too early. Inflation's coming back, but they have to worry about financial stability. They should have crushed it before. But yeah, essentially, if they don't hike rates, people will worry that there is something really wrong with the economy and it might crash. If they do hike rates by too much, people will worry that they're going to break something that might crash. So this is why I think he'll do 25 basis points, because that's what the market expects. People forget, and I posted it before, that on the 2nd of March 2020, the Fed cut interest rates by 0.5% because of COVID. And then 2 days later, we crashed by 28%. People don't necessarily, if everybody thinks that something is bullish, like stocks only go up or interest rate cuts are bullish, it's very rare it's actually bullish. It will usually do the opposite of what you think. So just trade against your emotions, basically. But yeah, good luck for everybody for the interest rate decision. I'm gonna get Bloomberg switched back on. But yeah, no, thanks for joining, Ben, and thanks to everyone who watched today. Jump into, I think you guys got a new Telegram, don't you? So
our old Telegram group got nuked by Telegram for no apparent reason again. So we made a new one for the second time. Yeah, Stablz community.
Stablz community. Nice one. Brilliant. Thanks so much for watching, everybody. And yeah, thanks for coming, Ben, and chat soon.
Thanks for having me.